Hi guys, how are ya? We're going to do 4-2 work together today. So if you would please turn to page 97 in your textbook. So what we're doing here is we're going to figure out an interim departmental statement of gross profit. So for each department. So you do your financial statements for the whole business, but when you have different departments, they're each going to do their own as well. So you can figure out which department's doing well, what's not doing well, where do we need to make changes, whatnot. What we're going to do here, it depends on your inventory. So if you do a perpetual inventory, so you go to Target, you buy something, they scan it, and then it automatically deducts from their inventory. That would be a perpetual. You have to have a pretty advanced computer system, but most places do perpetual nowadays. Or you can do a periodic, which means you're going to shut down, you're going to go through, and you're going to physically count all your items that you have on the shelves. It's not feasible to do that every month or even really every quarter. So you do what's called an estimate of ending inventory. So it's not exact, but based on your data in the past, you have an estimate. All right. The reason we want to have these statements is because you don't want to wait to the end of the year and be like, oh my God, this department is doing terrible. This will give you something to look at quickly to determine your potential profits or your loss for that matter as well. All right, so on page 97, we have our two departments again. So this is Willow Glen Interior Design on May 31st of the current year. Estimated merchandise inventory forms and statements are given to us. Your instructor will guide you through. Prepare an estimated merchandise inventory sheet for each department for the month ended May 31st. So we got our two departments. So our first one, the date's already there for us. We're going to start with our kitchen department. Then down here is going to be our bath department. All right, so let's just focus on our kitchen. So make sure you're looking at the right column, the first column with our kitchen. So it tells us our beginning inventory on January 1. So when we started the fiscal year, we had $110,000. Okay, net purchases to date. Well, make it a little difficult for us. So from net purchases from January 1 to April 30th was $42,500. And then our net purchases for May was $8,300. So we're going to add the two of those together. And our net purchases will be $50,800 as of May 31st. Okay, so you have to add your two together to get that. So our merchandise available for sale, again, we're going to add. So we have $160,800 worth of kitchen product to sell. So our net sales to date. So our net sales from January 1 to April 30th was $78,600. And then in May, we sold $20,200. So we add the two together. It's going to give us $98,800. Our estimated gross profit. So it's going to be our net sales, our $98,800, multiply it by 0.48 because that's our estimated gross profit. So we'll multiply those and we'll get $47,424. All right, we're then going to subtract to get our estimated cost of merchandise sold. So we'll subtract, we'll get $51,376. All right, so we're estimating that's how much we sold. Our ending inventory then, we'll subtract our $51,000 from our $160,800. Get our estimated ending inventory, $109,424. So that's how much we have left on our shelves as of May 31st in our kitchen department. Okay, so now we have to go do the same thing for our bath department. So our beginning bath inventory was $84,000. Again, pulling it right from the textbook. Our net purchases to date. So we're going to take our purchases from January 1 to April 30th, $30,100, plus our net purchases for May, $5,400. So we'll add the two together, which will give us $35,500. We then add again for our merchandise available for sale, $119,500 for our bath department. Net sales to date. So we had January 1 to April 30th, $52,300. And then in May, $8,400. Add the two together, gives us 60,700. So just comparing for our sales to date, our kitchen department is definitely outweighing our bath department. But also your kitchen, as you think about your house, to replace a kitchen, it's more costly to replace a bathroom. So just to see though, you can tell by looking at the department real quick and be like, oh, okay, this is where we're standing if you're comparing the two. So less our estimated gross profit. So we take 60,700 multiplied by 0.45, and that will give us $27,315. We're then going to subtract to get our cost of merchandise sold, estimated $33,385. We then subtract to get our estimated ending inventory, which will be $86,115. All right, so now we have our inventory sheets. We're ready to fill it in with our interim. Like an interim means somebody that's, like if you have an interim principal, they're just there in place until they can get a full-time. So an interim one is just a, once in a while we're going to check and see how we're doing until we can get our full financial statements at the end of the fiscal year. All right, so this is for just May here. We're just working about May. So we got kitchen, bath, and then we'll do a line. So our net sales, now we're looking at just May. One thing I should explain, because we haven't done this yet, these columns, they're subtotal. So anytime you're going to manipulate a number, add or subtract, all right, so our kitchen sales for just the month of May was $20,200. All right, because we're not touching that, we're going to put it there. Our estimated merchandise inventory on May 1st, they tell us in our textbook, estimated beginning inventory May 1st, $111,426. Well, during May, we also purchased some more. We bought $8,300 worth of product. Because we're adding them, these are going to be in the first column. So our merchandise available for sale together, $119,726. 109,424. 109,424. So we're going to subtract to get our cost of merchandise sold. So $10,302. That's the cost of our merchandise sold. Okay? So our gross profit then, you take after your merchandise sold, subtract from your net sales, you have $9,898 of gross profit before you've paid any expenses. So we have not paid any expenses yet. So then we have to find a percentage of our sales. So because it's always off the net sales, this will always be 100. So we're going to by 20,200. So we're going to take 10,302, divide it by 20,200, multiply it by 100 to turn it into a percent, round to the nearest decimal, which will give us 51% for our cost of merchandise sold. So our gross profit, 9,898 divided by 20,200 is going to give us 49%. These two have to equal 100%. Could be off a couple tenths due to rounding now. All right. So what you would do is you would compare industry standards for kitchen and see, okay, should every dollar we make, 51 cents is going to our product. We get to 49 cents before we pay any expenses. All right, so let's go ahead and do bath. Let me do this so we can still see our titles. We know our net sales is going to be 100. All right, so our net sales for our bath, just for the month of May, was 8,400. Our estimated beginning inventory on May 1st, because again, we do a periodic, we're not exact because we don't have a perpetual system. We are estimating we have $87,072 worth of inventory to begin the month with. We bought an additional 5,400. So for available for sale, we have $92,472 worth of merchandise. All right, we're going to less our ending inventory, up top, which we found. So it's $86,115 to get our cost of merchandise sold. So we're going to subtract. We get $6,357. We then subtract this from our net sales to get our gross profit, $2,043. All right, again, this is before we pay any expenses though. This is our gross profit. All right, so to find our percentage of net sales, we take 6,357 divided by 8,400, multiplied by 100, gives us 75.7. And then we take 2,043 divided by 8,400 gives us 24.3. So looking at this right now, that's a lot of money to spend on your product. That's a lot of money. So either we need to raise prices, which would increase our net sales number, or try to find a different vendor to get cheaper merchandise. Just looking at it quickly, but I don't know the industry standards. Maybe bath products are that expensive. I don't know. So anyway, our next thing is we just have to have a total for both departments. So all you're really doing here is you're adding across. So you're adding across to get your total. So our total sales for both departments was $28,600. Our percentage of net sales will always be 100. So we add 111,426 plus 87,072 to get our total estimated beginning inventory, which will be $198,498. We add our purchases, give us $13,700. Add these two together now to get our merchandise available for sale, $212,198. I mean, I guess you could have these two, or you can continue to add across. Either would work. So our less estimated ending inventory for May 31st would be the total, this plus this. So it's going to give us $195,539. Going to subtract to figure out what our cost of merchandise sold is. Again, you can just add across. $16,659, or you could subtract. Either would work. Subtract this from this, or we just add across to get our gross profit, which would be $11,941 for the month of May between these two departments. We're going to take $16,659 divided by $28,600, multiplied by 100. 58.2, round to one decimal spot, the nearest tenth. 11,941 divided by 28,600 gives us 41.8. All right, so that is for the whole business. These are the two departments. All right, well, they may have another department too, but these are for kitchen and bath, I should say. All right, let's check our answer, see how we did. Woo. All right, you guys are going to do 4-2 on your own for a grade. Let me know. Contact me in Moodle if you have any questions, or your classmates, and we'll get ready to move on. Thanks. Have a great day.